Natural gas prices have been soaring in 2022 due to a combination of factors, such as low inventories, high demand, supply disruptions, and weather events. However, according to the U.S. Energy Information Administration, EIA, natural gas prices are expected to decline in 2023 and 2024 as U.S. production increases and domestic consumption and exports remain flat or decrease. The EIA forecasts that the natural gas spot price at the U.S. benchmark Henry Hub will average $4.90 per million British thermal units, MMBTU, in 2023, more than $1.50 per million British thermal units lower than the 2022 average. The EIA expects prices to stay nearly the same in 2024 as dry natural gas production continues to grow in the United States and outpaces domestic natural gas demand and exports for most of the year. The EIA expects U.S. natural gas production to increase by about 2% in 2023, averaging between 100 billion cubic feet per day, BCF/d, and 101 billion cubic feet per day for the year. The EIA expects natural gas consumption to decline in the electric power sector as more renewable electric generating capacity comes online and overall electricity consumption declines as a result of cooler summer weather than last year. No new U.S. LNG export facilities are planned to come online in 2023, without new facilities, U.S. LNG exports will not increase. In 2024, additional increases in dry natural gas production, which will outpace higher LNG exports and slightly lower domestic consumption than in 2023, will put downward pressure on natural gas prices. The EIA expects dry natural gas production to average more than 102 billion cubic feet per day in domestic natural gas consumption will likely decline further, but rising U.S. LNG exports will partially offset the reduced consumption. The EIA forecasts that average monthly U.S. LNG exports will surpass 13 billion cubic feet per day by the end of 2024 and continue growing in 2025 as new export facility projects increase overall U.S. LNG export capacity. The EIA's projections are based on assumptions about economic growth, weather, fuel prices, and technological changes. However, there are many uncertainties and risks that could affect the actual outcomes of natural gas markets in the future. Some of these include the pace and extent of the recovery from the COVID-19 pandemic and its impact on energy demand and supply, the level of compliance with the OPEC+ agreement to limit oil production and its effect on global oil and natural gas prices, the availability and cost of pipeline and LNG infrastructure to transport natural gas from production areas to domestic and international markets, the environmental regulations and policies that could affect natural gas production, consumption, and emissions, the technological innovations and breakthroughs that could improve the efficiency and competitiveness of natural gas and renewable energy sources. Therefore, natural gas prices are expected to decline in 2023 and 2024 as U.S. production increases and domestic consumption and exports remain flat or decrease, but they are also subject to change depending on various factors that could influence the supply and demand dynamics of the market.